Hi, I am Ashikur Rahman. Welcome back to my channel Accounting Celebrity. Today I'll show you how to prepare a balance sheet. It is actually a balance sheet format. Many students are confused when they try to prepare balance sheet in exam. There are so many items in the trial balance and there are different sections in balance sheet. So students are confused when they write the different types of asset and liabilities in the different section of balance sheets. So let's get started. I wrote here balance sheet, but it is also called statement of financial position. Okay, statement of financial position. Okay, fine. So this format is actually for sole traders. Okay, this is not for limited company balance sheet. This is sole traders balance sheet. Okay, so look at here. There are 5 sections in this format. First of all, non-current asset, current liability, non-current liability, and financed by, means capital sections is this one. So in this first section, non-current asset, there are so many non-current assets in the business. So all the non-current asset of the business will come in this section. Okay, if you write any non-current asset here in the current asset section, it will be a mistake. Okay, so what items you should write in the non-current asset section? Okay, look at here. I wrote first of all here non-current asset, here land and building, that was property. Okay, all type of business property will be given in this section. After that you have to write what? Furniture, fixtures or fittings. These are basically same. Furniture, fixture, fittings. Maybe you have fixtures, maybe you have furniture, whatever you have. If it is non-current asset, just take it and write it here. Okay, after that, machinery, equipment. If there are any office machinery or office equipments, computers, this stuff will come here in this non-current asset section. Okay, then motor vehicle, motor van, delivery van, motor car, whatever it is. If you have this type of asset in the trial balance, you take it and write here. Okay, in this non-current asset section. You might have noticed here, we had here 1, 2, 3 columns. Okay, first one is cost, then depreciation. Okay, depreciation, then net book value, NBV. Okay, net book value. Okay, so you have to write here the cost value of your non-current asset. It will be clearly written in the question. Okay, the cost price, cost value. So land and building has no depreciation. Okay, so we had here no depreciation, just cost value you have to write in the net book value column. Okay, then fixture and fittings. So here you have to write first of all cost of this asset, then you have to write the depreciation. Okay, you will calculate depreciation, how much comes, then you will subtract here from this cost of non-current asset. Okay, then you write the answer here. Okay, same way machinery and equipment. If you have this asset, if you have this depreciation which will be given in the adjustment sometime in the trial balance, you have to subtract them from the cost price, then you have to write the answer here in the outer column. Okay, then you can add all these 3 columns. Okay, right, check how much your cost here, check how much your depreciation here, and check how much you need book value here. Okay, actually your need book value will be calculated to prepare your balance sheet. Okay, to balance your asset and liability, means total asset and total liabilities. Okay, so you can close these 2 columns because it has no calculation later. Okay, after that you have current asset sections. Okay, already there are several current assets in the business. Inventory, stock of goods. Okay, if you have these items, you write in the middle column. Okay, why middle column? If we'll write all this current asset stuff here, then we'll write all the current liability here, then we'll subtract. Okay, we'll write the answer in the outer column. Okay, so inventory and stock of goods, whatever, if you have, just write here. Trade receivables. Trade receivables are also called debtors. Okay, if you have debtors and you write in the first column. Okay, why you write first column? Because often you will have bad debts or provision for doubtful debts in the adjustment, okay, of this question. In this case, you have to subtract this provision for doubtful debt or bad debt. Okay, so you have to subtract from the trade receivable or debtor, then you have to write the answer here outer column. But if you see that in the question paper there is no bad debt in the adjustment or there is no provision for doubtful debt, in this case don't be confused, don't write this item here, amount here, just write this amount directly in the middle column. Okay, great. Now look at next one, other receivable. Other receivable means the prepayment, advance. Okay, prepayments. So you paid any kinds of expenses in advance, those are other receivable. Okay, if you write prepayments it's also fine, but it's better to write other receivable. It is new term, new terminology. Okay, next one is other receivable, accrued income. It is also called deferred income. Okay, if you have any accrued income, like you are supposed to receive something but still you did not receive, so you have to write in the books of account. In this case you have to put this money under this current asset column. Okay, because later in future you will receive this money, it is your current asset. Okay, so right here in the outer column. Okay, then cash or cash equivalent. Okay, if you have any cash balance, petty cash or cash equivalent like bank balance, okay, then this will come here. Okay, this is also a current asset. Okay, so these are basically current asset of a business. Okay, you will get these items in the question paper, in the trial balance to prepare the balance sheet. So next time I hope you will not be confused. Okay, you will take this, you will see this item and you will write here under this current asset section. Okay, current liability, third section of the balance sheet. So current liabilities, what items are here? First of all, trade payables. Okay, trade payables are also called creditors. Okay, so trade payables, creditor, whatever it is, if you have it, just write under this current liability section. Okay, fine. So write this value in the first column, because you will subtract this all item from this current asset. Okay, that's why if you write here you cannot calculate, it will be messed up. Okay, very good. Then other payables. Other payables means accruals. Okay, you are supposed to pay any expense of your business, but you could not pay due to the financial crisis or financial problem. Okay, like you salary, you could not pay your employee's salary, business employee's salary. So maybe later, next month, after next month you will pay. So, but you have to close your financial year. In this case, this amount is accrued, this amount is due to pay. Okay, so it is your liability, it is your current liability. So write here accruals here and put the value here. Okay, then prepaid income. Some incomes you receive in advance, you are not supposed to receive, but you received in advance, but it is not due to get paid. Okay, so in this case it is your also a current liability. Okay, then bank overdraft. So bank overdraft is a common item. Okay, it is also a current liability. So write this. Basically these are the items in the current liability section. Okay, so now you add this all items, then you insert the total here. Okay, in the middle column. After inserting, after putting this money here, then you subtract this total current liability from total current asset. Okay, then you check, then you get the value here. Okay, so what does this amount call? Current asset minus current liability equal to what? If you say working capital, you are correct. Okay, so this is your working capital. Okay, so working capital is also called what? Net current assets. Okay, so this is your third section. Okay, then what you need to do? So you got already your working capital. Okay, now over here you have already your non-current asset, your total non-current asset. You add this all non-current asset and you got this value. Okay, now you have here working capital. You got working capital by subtracting a liability from current liability from current assets. Okay, now this value, this working capital will be added with this. Okay, this asset and this asset will be added and you will write the total here. Okay, so these two values will be added. Okay, after that you have non-current liability section. Okay, this is your non-current liability section. Look at here. So what are the non-current liabilities? Like loan, bank loan, debentures. These are basically non-current liabilities. So what does non-current liability mean? Like if you take some loan for long-term use, more than 1 year, 5, 10 year, 10, 20 years, that will be your long-term liability. Okay, means non-current liability, which is loan, bank loan or debenture. Okay, this is basically same words. Okay, so write this amount here in the last column. Okay, now see over here you wrote less, means you have to subtract. Yeah, so this value you have to subtract from where? You have to subtract this asset, this total asset. When you added these two, you got this one. Yeah, now you have to subtract this value from this total. Okay, then you will get this. This is your net asset. Okay, these are the amount. This is the amount of your asset you have in the business right now. So what is your capital then? If this is your asset, then what is your capital? So last section, the fifth section is financed by. Okay, financed by. So what is financed here? Opening balance. What do you mean by opening balance? Opening balance means the opening balance of your capital, means business capital. Okay, so write the business capital here if there is any opening balance. If there is no opening balance, you don't have to write. Okay, then equity and capital. So equity or capital, these are same words. Okay, so equity and capital will be given in the question. Okay, so you take this value and write it here. Then with this capital you have to subtract your drawings. Okay, what do this drawings mean? Drawings mean that the owner took money or goods from the business. Okay, this is actually called drawing. Okay, so now you subtract the drawing from the capital, then you get this value. After that you add profit for the year. Okay, you have to add this value, profit for the year, you have to add this. Okay, so if you have loss for the year, in this case obviously you have to subtract. Okay, so suppose it is profit for the year, so you add this value with this, then you get this answer. Okay, and finally you see this answer and this will be same. That means your balance sheet is balanced. You did this balance sheet correctly. Okay, so this is how you need to prepare balance sheet for sole traders. I'll show you later in my next video how to prepare balance sheet for limited company. Okay, now look at here. So this is exactly what items you should write in this format. Okay, just remember how did I represented these items here. You see, you learn this, you just try to remember these items. If you are able to remember, then whatever question is given, whatever items are given in the exam paper, no worries, you can prepare the balance sheet in the exam. Okay, so that's all for today. I hope you enjoyed this video and you learned something. Please subscribe my channel for more videos and share this lesson with your friends. So stay safe and take care.